Okay, imagine this. You're looking at a company's report. The headlines. Profits are down. Big time.
Right.
But then you dig a bit deeper and whoa, there's this huge pile of cash. And they're making these bold new investments.
Yeah, it seems contradictory, doesn't it?
Totally. So how do you figure out what's really going on?
Yeah.
Beyond just those initial numbers.
Well, that's exactly what we're going to try and do today. We're going to really dig into Graphite India Limited's Q1 FY26 results. They just came out August 1st, 2025.
Fresh out the press.
Exactly. And this isn't just about reading the summary. It's about understanding their core performance, what they're actually doing strategically, and, the bigger industry picture that's affecting them. They're a major player in graphite electrodes globally.
Right. We want to get to the why behind it all. And maybe even more importantly, ask, okay, so what happens next? We'll look at the figures, sure, but also what the chairman's saying, what's happening with steel globally, and especially in India, plus some really interesting investments they're making. Long-term stuff.
Definitely looks like they're playing the long game. So where should we start? The numbers.
Yeah, let's hit the numbers first. The Q1 snapshot for FY26, so that's the quarter ending June 30th, 2025. Consolidated net sales rose 665 crores.
Right, and just a reminder, a crore is 10 million rupees, so
Yeah.
6.65 billion rupees.
Yep, and that figure is down 8.7% compared to last year.
Okay.
Then consolidated EBITDA, earnings before interest, taxes, depreciation, amortization, that was Rs 193 crores. That's a pretty steep drop, 37.1% year on year.
Wow, yeah, that's significant.
And net profit followed, consolidated net profit at Rs 133 crores, down 43.6%. Ouch.
Okay, so sales down a bit, but profits down a lot more.
Exactly, which brings their consolidated EPS, earnings per share, to R6, 6.87.
Now, the really interesting part, and this came straight from the chairman, is why things dipped. It wasn't mainly sales volume. It was primarily lower realizations. So they're selling roughly the same amount of stuff, but getting significantly less money for it.
Ah, okay, so price pressure.
Big time. And that begs the question, why are prices down? More competition globally. Is demand softening somewhere?
Wow.
It definitely suggests the market got tougher.
And digging into the details, the accounting, they took a pretty big inventory write-down because of those falling electrode prices.
How much was that?
It was Aura's 77 crores consolidated and Arta's 75 crores standalone as of June 30th.
Okay, 77 crore. That's not insignificant.
No. And it makes you wonder, right, how much does that accounting move really tell us about the state of the electrode market now? Is it a warning sign or just, a temporary thing?
I'd say it's definitely a flag. When you have to mark down your inventory value like that, it's a direct signal the market price has dropped below what you thought it was worth.
Right.
It points towards either too much supply out there or maybe weaker demand than expected. It's the market dynamics hitting their balance sheet directly.
And just for context, the standalone numbers, so their core Indian operations mainly, showed a very similar pattern. Net sales Rs, 643 crores, down 4.3%. EBITDA Rs, 200 crores, down 24.5%. Net profit Rs, 145 crores, down 29.3%.
So yeah, same story across the board, basically. It's hitting their main business hard.
But, and here's where it gets kind of confusing or interesting maybe.
Yeah.
Despite those profit numbers tanking in Q1, their balance sheet looks incredibly strong, like really strong.
Okay, tell me more.
End of June, they had a consolidated net cash position of Rs, 4,173 crores.
4,000 crore net cash.
Yeah. And standalone, Rs, 4,025 crores. And their debt, tiny. Gross debt consolidated is only Rs 170 crores. Standalone just Rs 75 crores.
Wow. Okay, so they are absolutely flush with cash, even with profits taking a hit this quarter. That shows some serious financial muscle, some resilience.
It really is counterintuitive, isn't it? Profits down sharply, but sitting on a mountain of cash makes you think, are they saving up for something huge? Or just incredibly financially solid?
Could be both. It definitely gives them options. What about their actual production levels?
Good question. Standalone capacity utilization was 82%. That's down a bit from 87% the same time last year. So running steadily, but, not flat out.
82%. Okay. Still pretty decent utilization. And that stability, coupled with the cash, it makes their other moves interesting. They've been diversifying, right?
Yeah, exactly. They've got, over a 60% stake in General Graphene Corporation?
Right, the U.S. company.
Yeah.
They have that proprietary tech for making large graphene sheets, supposedly high quality but low cost. Graphene's that super material, incredibly strong, conductive.
And they also took a 31% stake in Graphite India.
Ah, yes, Graphite. They're into advanced chemistry batteries for EVs, energy storage. that whole space.
So graphene and batteries, how do these fit in? They seem a bit different from electrodes.
Well, that's the key question, isn't it? My take. They're probably leveraging their core expertise in carbon materials and material science and using it to branch out into these really high growth areas. It's a way to perhaps de-risk their business from the ups and downs of the steel cycle.
Ah, okay. Makes sense. Like a calculated bet on future materials beyond just their main product now.
Precisely. It's forward thinking.
And speaking of the steel cycle, those diversification moves make even more sense when you look at the crazy shifts happening in the steel industry itself. That's what drives their core electrode business after all.
Absolutely. The context is crucial here. Globally, crude steel production actually contracted in Q2 of this calendar year, 2025, down 3.3% year on year.
But here's where it gets really, really interesting. Inside that global number, there are huge differences depending on where you look.
Oh yeah, big time. China, for instance, the world's biggest producer by far, their output fell 5.4% year on year. That's a significant drop.
But then you look at India,
Totally different story.
complete opposite. India saw robust growth, 9.3% increase year on year in steel production.
Amazing contrast, isn't it?
And other regions were mixed. Middle East up 3.5%, North and South America kind of flat, EU down 3.5%.
So India is really the standout bright spot right now.
Why? What's driving India's growth so much?
Well, it's a few things. Strong domestic demand is key, especially from all the government's infrastructure spending. Think railways, roads, energy projects.
Right, building stuff needs steel.
Exactly. Plus, sectors like automotive, energy, general engineering are doing well. And another factor, maybe less obvious, is the safeguard duty India put on steel imports recently. That's helped local producers.
Protectionism helping domestic demand.
To some extent, yes. It all ties back to the government's big push on info-led growth outlined in the budget. Steel-intensive stuff. Which is obviously good news for a company like Graphite India operating there.
Okay. And what about their raw materials? Needle coke, that's the key one for electrodes, right?
Yep, crucial input. Prices for that were relatively stable during the quarter, which is helpful. Didn't add more cost pressure.
Good. And one other thing, those U.S. tariffs that were announced recently, any impact there?
They expect it to be limited. Graphite India has a pretty diverse export base, selling to lots of different countries, so they're not overly reliant on just the U.S. market. That diversification helps cushion blows like tariffs.
Smart risk management.
Definitely. And this all leads into another massive global trend that's super relevant for Graphite India's future.
Which
The
is?
big shift towards electric arc furnace, or EAF, steel making.
Right. Using scrap steel and electricity instead of iron ore and coal.
Exactly. It's much cleaner, greener, fits with all the decarbonization goals globally. Plus, it's often more cost-effective, especially with volatile coal prices.
Yeah.
Environmental regulations are pushing this hard.
And EAF furnaces use a lot more graphite electrodes than the old blast furnaces, don't they?
Way more, yes, that's the critical link. So this global shift away from traditional steelmaking and towards EAF is expected to be a major demand driver for graphite electrodes in the coming years.
Okay, so the future looks brighter for electrode demand because of this EAF trend.
Potentially, yes. And connect that to India's own national steel policy. They have this ambitious plan to hit 300 million tons of steel capacity by 2030.
Wow, 300 million.
Yeah. A lot of that new capacity and upgrades to old capacity will likely involve EAF technology. So it reinforces that long-term demand picture for electrodes, especially within India.
Which makes their next move make a lot more sense, even with the bad Q1 numbers.
Let me guess, the capacity expansion.
Got it. Seems like a really bold strategic move.
Yeah.
On August 1st, the same day as the results, the board approved a major capacity expansion for their graphite electrodes division.
Okay, how major?
They're planning to add 25,000 TPA tons per annum of capacity.
25,000 tons. That's a pretty significant chunk on top of their existing capacity.
It is. And the investment. Around 600 crores. That even includes 100 crores specifically for captive renewable power to run it.
600 crore. Wow, how are they funding that? I guess they have the cash.
Well, they said either internal resources, and yeah, they definitely have the cash pile, or maybe debt. They're keeping options open.
And the timeline.
Phased rollout. Phase 1 is 13,000 TPA. Supposed to be commissioned within just 12 months. Pretty fast.
Very fast.
And Phase 2, the other 12,000 TPA,
Yeah.
within 36 months.
Okay, so a near-term boost and then a medium-term one. This really signals they are banking hard on future electrode demand growth.
Absolutely. The rationale they gave was exactly that.
Yeah.
Anticipated growth, especially driven by EAF and, quote, structural changes in the global industry landscape.
It's a big bet placed right when their current profits are down. Picks guts. Or maybe just long-term vision.
Yeah. Now let's quickly loop back to the segment performance for Q1. The core graphite and carbon segment. Its consolidated revenue fell 4.6% year-on-year,
Okay.
but its profit before tax and interest plummeted, down 65% year-on-year.
65%. That really underscores the impact of those lower realizations we talked about.
Directly, right.
Oh.
Shows how much pricing power, or lack thereof, hits their main profit engine.
Absolutely. If you're selling for less, even if you sell the same amount, your profit margin just gets crushed. That 65% drop tells that story vividly.
However, their smaller steel segment actually did okay. Revenue was stable, but its profit before tax and interest increased by 25% year-on-year.
Oh, interesting. A bright spot there.
Yeah. And it's worth remembering, Graphite India isn't just electrodes, even though that's the main thing. They also make calcined petroleum coke, CPC.
Right. Used in aluminum and steel making, too.
Yep. And other value-added graphite products for specialized industries, auto, aerospace, chemical, pharma, machine tools. And they have those renewable energy assets, too. Hydro, wind, solar.
So it's a fairly diverse portfolio overall, even with the heavy lean towards electrodes.
Mm-hmm.
So, okay, let's try and pull all these threads together. What's the big picture here from this deep dive?
Yeah, what's the key takeaway?
Well, it seems like despite some pretty undeniable short-term pain, those Q1 results clearly show headwinds, mostly from lower prices.
Right.
Graphite India actually shows really strong underlying financial health. That massive cash reserve is Exhibit A.
Can't argue with that, cash.
And they're clearly not just sitting on it. They're making bold, strategic bets on the future, the diversification into graphene and batteries, and especially this huge new electrode capacity expansion.
Yeah, they're definitely looking forward.
They seem to be banking heavily on that global EAF transition gathering pace, and particularly on India's own steel demand boom continuing. It fits with what the chairman talks about too, operational excellence, focusing on customers, sustainability.
So it's like weathering the current storm while building a bigger, better ship for the future.
That's a good way to put it. Positioning themselves for the next wave, even while navigating the current rough waters.
Ultimately, this deep dive really shows how a company can manage these fluctuating markets, right? Using its strengths, like that balance sheet, and investing strategically in where they think the industry is heading long term.
Yeah, it's a fantastic illustration of why you can't just look at one quarter's headline profit number and judge a company's entire health or strategy. The surface numbers don't tell the whole story.
It's not at all. That contrast between the profit dip and the big expansion plan is really stark.
It really is. It forces you to think longer term.
Absolutely. So here's something for you, our listeners, to chew on as you go about your day. Think about this. How might a company showing seemingly contradictory signals, falling profits short term, but making massive long-term investments, actually reveal a deeper, maybe more resilient strategy than those initial numbers suggest? And what does that mean for how you look at the health and the future prospects of any industry you're keeping an eye on? Something to think about.